The global financial system is stumbling through a turbulence unlike any we have seen before. The Federal Reserve's recent decision to slam on the brakes with interest rates sent shockwaves through the market. But this is just the beginning. Whispers of a banking crisis in the US are swirling, and once unshakable dominance of the US dollar in oil trade is facing a potential challenge. Buckle up as we navigate this economic roller coaster, exploring the Fed's tightrope walk, the potential banking crisis brewing beneath the surface, and the shifting sands of the petrodollar system. If you have concerns about your financial situation these days, this is a video for you. Like this video to give us a boost and share it with your friends to help us grow. The Federal Reserve's recent decision to hold interest rates steady at a 20-year high of 5.25 to 5.50% has sent shockwaves through the market. This cautious stance by the Fed comes amidst growing concerns about a potential banking crisis in the United States and significant shifts in the global financial system, particularly regarding the future of the petrodollar system. For months, the Fed has been engaged in a delicate balancing act, attempting to curb persistently high inflation without derailing economic recovery. Initially, projections for 2024 envisioned 3 rate cuts to cool down inflation without triggering a recession. However, the recent decision to hold rates steady reflects the Fed's growing anxiety over inflation, despite some encouraging signs like a deceleration in the Consumer Price Index to 3.3% year-over-year in May. Fed Chair Jerome Powell emphasized the data-dependent nature of their decision, highlighting the need for sustained progress on inflation before considering rate cuts. He acknowledged modest further progress towards the target, but stressed the need for continued vigilance. This cautious approach, while frustrating to investors hoping for more aggressive easing, underscores the Fed's commitment to maintaining price stability. Within the Fed's dot plot, a chart mapping out policymakers' expectations for future interest rates, 8 officials penciled in 1 rate cut for 2024, while 7 projected 2 cuts. Powell clarified that all outcomes from no cuts to 2 cuts are plausible, reinforcing that these projections are not a really strong commitment to a particular rate path. The Fed's decision to hold rates steady also raises concerns about the health of the U.S. banking industry. Several factors contribute to a potentially bleak outlook. Rising interest rates make it difficult for businesses to refinance existing loans or secure new ones, straining companies with significant debt burdens. The recent failures of regional banks such as Silicon Valley Bank, Signature Bank, First Republic Bank, Silvergate Bank, and Heartland Tri-State Bank highlights the fragility of smaller financial institutions. These collapses have raised concerns about the Federal Deposit Insurance Corporation's ability to cover losses, especially given the significant drawdown on its insurance funds following these failures. Commercial real estate loans pose a significant risk to regional banks, which are heavily exposed to this sector. High vacancy rates in office and retail spaces combined with rising interest rates have created a precarious environment for refinancing these loans. As a result, smaller banks, which often lack the resources to absorb such losses, are at heightened risk of failure. This situation could lead to further consolidation in the banking industry, with larger banks absorbing their smaller counterparts. Beyond the US, the global financial landscape is experiencing significant shifts, particularly regarding the dominance of the US dollar in oil trades. The long-established petrodollar system, established back in the 1970s, saw oil priced exclusively in US dollars, bolstering its status as the world's primary reserve currency. However, this system might be facing its twilight. Saudi Arabia's involvement in Project Enbridge, a blockchain-based cross-border payment system, marks a significant shift in global financial dynamics. This project, led by the Bank for International Settlements (BIS), aims to create an alternative to the SWIFT payment system, enabling transactions in various currencies and potentially reducing reliance on the US dollar. Saudi Arabia's participation in Project Enbridge aligns with its Vision 2030 initiative, which seeks to diversify the kingdom's economy and reduce its dependence on oil revenues. While some speculate that this move signals the end of the petrodollar era, it appears more likely that Saudi Arabia is strategically modernizing its payment systems to enhance economic leverage. By collaborating with central banks from Hong Kong, the UAE, China, and Thailand, Saudi Arabia aims to develop a central bank digital currency for trade settlements, facilitating more efficient cross-border transactions. Despite these advancements, the core practice of denominating crude oil trade in the US dollars remains largely unchanged. Saudi Arabia's dual approach, balancing the use of the US dollar with other currencies, reflects its strategic intent to maintain strong economic relationships with both Western and Eastern partners. The Fed's cautious approach to rate cuts, the potential for a banking crisis in the US, and the shifting dynamics of the petrodollar all paint a complex picture for the future of global finance. Here are some key questions that remained unanswered. Will the Fed be able to tame inflation without triggering a recession? The delicate balancing act of the Fed will be closely watched in the coming months. Their effectiveness in curbing inflation without hindering economic growth will determine the trajectory of the US economy and its impact on the global financial landscape. Can the US banking system weather the storm? The health of the US banking industry will be a crucial factor in determining overall economic stability. Regulatory reforms and potential government interventions might be necessary to prevent a banking crisis and mitigate its potential damage. How will the petrodollar system evolve? Saudi Arabia's move with Project Enbridge is just one piece of a larger puzzle. It remains to be seen whether other oil-producing nations will follow suit and how the US will respond to the potential erosion of the petrodollar system. The interconnectedness of the global financial system means that a crisis in one region can have ripple effects across the world. A banking crisis in the US, for example, could lead to a credit crunch impacting businesses and consumers globally. Similarly, a significant shift away from the petrodollar system could trigger currency fluctuations and financial instability in countries heavily reliant on US dollar reserves. The coming months and years will be a period of significant change and uncertainty in the global financial system. The Fed's future actions regarding interest rates and quantitative easing will have a significant impact on the global financial markets. The ability of US banks to weather the current challenges will be crucial for maintaining financial stability. Whether the petrodollar system undergoes a gradual transformation or a more dramatic shift will depend on the actions of major oil producers and international financial institutions. The current confluence of factors brewing in the global financial system presents both challenges and opportunities. The Federal Reserve's interest rate decisions, Saudi Arabia's financial modernization efforts, and the ongoing challenges in the banking sector collectively shape the future of global finance. Investors and policymakers alike must remain vigilant, adapting to new data and emerging trends to navigate this era of economic transformation. Don't forget to like, subscribe to our channel for more updates. Stay safe. See you in the next one.